It is February 2026, and if you walked into a supermarket this morning, you probably noticed something frustrating. The price of bread, milk, and sugar has crept up again. According to the latest reports, inflation in Kenya is sitting at a stubborn 4.4%. But here's the real tragedy that most people aren't talking about. While the cost of living is moving at a marathon pace, your savings in a traditional bank account are likely crawling. If you have your hard-earned money sitting in a standard savings account right now, earning you maybe 3% or 4% interest per year, you aren't just not making money, you are actually becoming poorer every single day. By the time you account for inflation and the various bank charges, your purchasing power is shrinking. Your bank is taking your deposits, lending them out to other people at 14% or 16% interest, and giving you back absolute crumbs. It is a system designed to keep the institutions wealthy and the savers stagnant.
But there is a group of Kenyans who have figured out a different way. They are the ones who aren't complaining as loudly about the economy because their money is working just as hard as they are. These are the people who have moved their capital into top-performing Saccos. In the last financial year, while banks were offering peanuts, some of these institutions were paying out dividends as high as 15%, 18%, and even 20%. Welcome to Finance Explained Simply. This is the home for clear, honest, and data-driven financial advice tailored for the Kenyan context. Our goal is to help you build a multi-million shilling empire using the tools available right here at home. Before we dive into the deep research of the top 5 Saccos you should consider in 2026, I want to invite you to be part of our growing community. Hit that subscribe button right now and join thousands of other Kenyans who are taking control of their financial destiny. Also, I'd love to hear from you in the comments section. Are you currently a member of a Sacco? And if so, which one has treated you the best? Let's start a conversation that helps everyone grow. To understand why Saccos are the ultimate wealth-building tool in 2026, we first have to understand the mechanics. Unlike a bank where you are just a customer, in a Sacco, you are a member and a shareholder. When you save money, it is treated as deposits, which the Sacco uses to give loans to other members. At the end of the year, the interest earned from those loans is distributed back to you as interest on deposits. Furthermore, when you join, you buy shares in the Sacco, which entitle you to dividends on shares. When you combine these two, you often get a total return that dwarfs anything a commercial bank can offer. Now, let's get into the rankings. The criteria for our 2026 list isn't just about who has the highest percentage. It's about stability, digital accessibility, and how easily you can access credit when you need it. Coming in at number 5 is Safaricom Sacco. In 2026, convenience is king, and Safaricom Sacco has mastered the digital landscape. Their mobile app is arguably the best in the industry, allowing you to track your savings, apply for a loan, and have the funds dispersed to your M-Pesa in a matter of seconds. For the young professional or the digital nomad who doesn't want to spend their afternoon in a physical office filling out paperwork, this is the perfect entry point. Their dividends have remained consistent and competitive, making them a reliable choice for the modern Kenyan. Number 4 on our list is the Kenya Police DT Sacco. Do not let the name intimidate you. This Sacco is open to the public and has become one of the most robust financial institutions in the country. What sets them apart in 2026 is their incredible liquidity. While some smaller Saccos might struggle to process large loan requests during tight economic times, the Police Sacco is a giant. They have a massive asset base, which means when you need that 3 million shilling development loan to start your project, they usually have the cash ready. Their efficiency in loan processing is legendary, often taking less than 24 hours. At number 3, we have Sharia Sacco. If your ultimate financial goal is to own land or build a home, Sharia Sacco should be at the top of your list. They have one of the most active housing societies in Kenya. In 2026, they have been at the forefront of the Build With Me movement, offering members exclusive access to discounted plots in high-growth areas around the Nairobi outskirts, Machakos, and Kajiado. Their loan products are specifically tailored for construction, offering longer repayment periods and lower interest rates than what you would find at a mortgage firm. Moving to number 2, we find the titan of the industry, Stima DT Sacco. Stima is the definition of blue chip. They have been around for over 50 years and have weathered every economic storm Kenya has faced. In 2025 and 2026, they have continued to lead by example, paying out billions in dividends to their hundreds of thousands of members. They offer a wide variety of products, from M-Power for quick mobile loans to specialized accounts for groups and chamas. If you are looking for a place where you can park your money for the next 10 years and sleep soundly, knowing it is safe and growing, Stima is hard to beat. Finally, at number 1 for 2026, we have Tower Sacco. Originally rooted in Olkalu, but now a national powerhouse, Tower Sacco has consistently topped the charts for the highest dividend payouts in the country. In an era where most institutions are struggling to maintain margins, Tower Sacco has managed to keep their operational costs remarkably low, which means more money goes back into your pocket. Last year, their combined payout for interest on deposits and dividends on shares reached nearly 20%. That means if you had 1 million shillings with them, you earned 200,000 shillings just for letting your money sit there. That is the power of high-yield saving. But before you rush to withdraw your money from the bank, we need to talk about safety. In 2026, the regulatory landscape has changed. SASRA, the Sacco Society's regulatory authority, has become much stricter. Before you join any institution, you must verify that they are on the 2026 list of licensed deposit-taking Saccos. There have been instances where credit-only entities have tried to pose as deposit-taking Saccos, leading to members losing their money when things go south. Always do your due diligence. A genuine Sacco will always be transparent about its books, its board of directors, and its licensing status. So, what is the strategy for the rest of 2026? It's simple. Stop looking at your savings as a rainy day fund and start looking at it as an investment. If you are currently employed or if you are running a business, commit to a monthly contribution that goes directly into a Sacco. Use the 3 times rule. Aim to save enough so that your loan limit, which is usually 3 times your savings, can cover your biggest financial goals, whether that's buying a car, starting a business, or building a home. Wealth in Kenya is built through community and cooperatives. The days of relying on a 3% interest rate are over. It is time to move your money to where it is treated with respect. Thank you for joining me on Finance Explained Simply. If you found this breakdown helpful, please do us a huge favor. Subscribe to the channel, share this video on your WhatsApp groups with your friends and family who need to hear this, and leave a comment below. Tell us which Sacco you want us to do a deep dive review on next, or share your own success stories. Let's grow our wealth together. See you in the next video.